So I have basically, I've been showing Wall Street and the trading world at large since the early 1980s that the chart is a roadmap to the absolute best pricing that you can do, figuring out where a market's going to move forward. Nothing works as well as a chart. And I've been able to illustrate that in many, many, many videos and of course, sessions like these to show people that as opposed to systems, which when the market changes gears, systems need to have parameters tweaked and they change and blow up. Analysis just continues to morph with the markets. So at the beginning of this year, the analysis told me to tell everyone watching my Omniacs around the world that that the bottom was in right now, February of this year, bottom is in the stock market. I actually did a webinar for Traders Corner in the beginning of the year. In fact, right here, I did a webinar for Traders Corner, and I started doing these webinars on 207, calling the bottom. If you wouldn't mind, before we get started on what I want to show you now, what I have planned is we did a webinar in February. I used a bunch of charts to prove bottom was in. I'm going to show you a quick clip of the previous webinar we did together in February. And then I'm going to move forward looking at every one of those very same charts that we looked at in February to see, is the bottom in? Were we right? And where are we going next to show you the power of technical analysis? Now, while I do this presentation, I promise you on many of these charts, there will be tips and tricks that will work very well for you to use in the future. So let me start off, if you don't mind, with a quick clip. This was the last webinar I did for Traders Corner.
Ladies and gentlemen, here to present Get the News, Read the Charts is Mr. Oscar Carboni.
Let's see where the volume is here.
Welcome to Traders Corner, Oscar. Thank you for the invitation, and a round of applause for all you great presenters before me. You're learning a lot out there, and this is fantastic for all of you. I will say that I've been trading for over 41 years now. Grew up on the exchange as an 18-year-old kid, and literally held point and figure charts before there were computers. This is actually one of my charts from the days of old. And I have to tell you, there is no better roadmap than reading a chart. That is absolutely the roadmap, if you will, to further pricing. And no matter what you look at, no matter who thinks or feels anything, has nothing to do with where the market is going to go. If you want to know where the market is going to go, you need to view a chart. That is the roadmap. So I have a thesis that I put out, which I also did back in 2007, calling the top of 2007-8. Forget about that. I put out a thesis earlier this month that the bottom has formed using charts. I received a lot of pushback afterwards, as you might have imagined, right? But most of that pushback was, I think, and let me tell you right now, when you feel or think, that is a useless opinion. It has nothing to do with where the market's going to go. The charts will tell you where the market is going to go. I promise you. Now, I have nothing to sell you. There's nothing I'm going to sell you at the end of this presentation. My job is to show you market direction, where it looks like we're going next, to prove to you the bottom's in and give you some good information that you can use moving forward. Traders, that was my last webinar. We were here. This is the date.
Oscar.
Yes.
As unprofessional as it is for me to interrupt, I absolutely remember that webinar, and as hesitant as I was to believe you, you nailed it.
I remember that you actually spoke to me afterwards and said you didn't think that the bottom was in. So,
Oscar, credit where it's due. You made that call 100% accurate and ridiculously so. Congratulations.
Now that is the power of technical analysis, because even though I do have a crystal ball, I don't actually use it for trading, I promise. So what we do have is technical analysis, and let me show you where we are now. So we were here when I came up with my thesis, the bottom was in, and showed a vast amount of charts to prove that the bottom technically was in. The market has traveled dramatically higher since then. This is the NASDAQ daily bar. before we get into anything else, please remember how risky trading can be. Never trade without stops. I don't care if you're trading options, stocks, cryptos, you name it. If you're trading it, ETFs, it's going to be risky. Never trade without stops, okay? They are number one. You put them in first. Anyway, what the chart will show you is exactly what the big boys on Wall Street are doing in a very simplistic way that you can understand. So you've got the NASDAQ racing higher ever since we called bottom, and we do videos almost every night to day trade, so we're not always long, of course. We buy and sell. But the bigger picture is the bottom was in, and what I want to show you on the NASDAQ is that freakishly it started using a very small average or algorithm, if you will. An average is an algorithm. I mean, the difference between an algo and an algorithm and an average, it's just not as complicated. But if you have something like an average, that's a small algorithm to begin with, just so that you know. Might be an algorithm from the days of old, but it's still an algorithm. In any event, the NASDAQ started to catch this right here. It started to catch on to something that I found slightly amazing. It's the 20-bar moving average. It's a very small moving average, but Wall Street is buying it every time we get down there. Look at that. It just runs up, hits the average, runs up, hits the average, and it's been happening every time. So what you can use to time NASDAQ on a daily basis, which is right now, because these algorithms or averages tend to morph and change, right now, top day, you can get away with the 20-bar moving average on the NASDAQ. Use it. I promise you, it's working really well. So that has been helping us, amongst other things that we use, of course, time the day trading. But as you can see, the market has put its bottom in, obviously. It has rallied dramatically since we thought the bottom would be in. And I want you to use the 20-bar moving average to time your NASDAQ trades, because if you ask me, it's working like a charm. That is what Wall Street is using right now. How can we tell? Well, look, it stops every time it gets near it. And I don't know that me trading 5, 10, or 2 lots is enough to stop the market, right? So it's not me. It's got to be Wall Street doing it. Collectively, we're all Wall Street. So the NASDAQ chart, very easy to read. The tip for you on this chart is use the 20-bar moving average. If, in fact, we morph out of that into a different average, if you contact me, of course, I'll be more than happy to tell you what that new average is. In our last video, we did look at NASDAQ in our last webinar, and we were here. So we've moved up dramatically. The call has been correct. The charts have proven to be correct. We looked at Apple as well. So let's go see where Apple is now. Okay, another one. Look at this. This is an interesting one. On Apple, and Apple is the market. I'm telling you right now, this is huge. It is a creature of habit. And you know what that creature of habit is? The same exact average that you see in the NASDAQ. For whatever reason, they are just teeing off when you get to that average. And guess where we're about to get to by today or tomorrow? Another tap of that average. This is Apple. It is a creature of habit. It is the 20-bar moving average. Now let's go back a little bit. It worked for a long time, right? It started working here, and it has just held on ever since. And then we went into a frenzied up move. So a tip for you today is if you want to time Apple with the 20-bar moving average. Same thing with NASDAQ at the moment, which makes a lot of sense because Apple's such a big piece of the market. So I hope this works. It'll time Apple for you. And if that changes, of course, you come see me in my trading room. I'll be more than happy to tell you what it looks like Wall Street has grabbed onto next. But very nice move. And if you can see, it's created a channel as well. It fails at the top of the channel and cracks, gets just about to the bottom of the channel, hits the 20-bar average and rallies again. And it has just over and over. And you know the fund managers are taking full advantage of this, right? Absolutely. Every time it hits that average, they come in and buy like mad. What will they do here? Your job is to wait and see. It hits the average, you back off. It holds and closes, you can then get long. Gets through the average and starts to drop, you wait and see if it gets through the green line. If it gets through the green line, it is time to go short. That's how we will use this average on Apple. I hope that will help you moving forward. Let's go take a look. Another chart that we looked at together, but now averages or algorithms, if you will, we'll switch up a little bit, is Amazon. The Amazon chart, same sort of thing, but the average has changed. Look at this one. It's no longer a 20. They've grabbed onto a 32 algorithm for whatever reason. Whatever. I don't care what they use as long as I can spot it and put it to work for our OMNIAC so that we trade on the right side. Does not matter to me how to invent the wheel. I just want to know how to slap it on my car and go fast. So look at how well the 32 bar algorithm, or moving average, if you will, has worked on Amazon. Look at this. It's freakish how well this has worked. Look at every instance. So, all right. So if Wall Street's going to use it, guess what we're going to do, kids? We're going to use it because we are smart enough to know that if Wall Street's using it, that's what we want to be using. So a tip for you on Amazon, if you're an Amazon trader, is use the 32 bar simple moving average, or it's a 32 bar algorithm from what I can see. A simple one, but Wall Street is using it for sure. So we are just penetrating right here. You're getting through that average. You may come down and hit the black trend line, but that is what happens if you get through the average, like you see here and like you see in there. So let's let this tell us what's going to happen next. We know it's been holding the average really well and staying inside of this black channel. Falls out of that, we've got something new to look at. But the tip for you is use the 32 bar simple moving average on Amazon. I know that will help you. Look at how well it works and look at how simple this is. Now, I will say the analysis I do, which I give out to my OMNIACs, the platinum service, if you will, is when I'm personally getting in and out of a market, or if the Omni wants to get in and out of a market, whether I take the trade or not, I send out signals. And they're day trade. We get in at some time in the day and we're out by the close. We don't scalp, but we're in and out. That is much more intricate analysis than this. This is technical analysis 101. I can share these charts with you if I was laying on a cot in kindergarten drinking milk and cookies. I promise you, this is my low-level analysis, but there's a lot of you out there that I know this is going to help. What I have learned over my years is the more complicated I was in the beginning, the further from the market I was keeping myself. When I finally learned to be simple, I became at one with the market and started figuring out what I see and what's going on. It takes simplicity to figure this out, but you got to go through complication to learn. Push the complication off to the side, get simple. You either learn that for yourself or you come hang out with me in my live trading room and I will help to teach you how to be much more simple than you may be today, because simple works. Let's move on. Amazon. Next one we looked at was Meta, and this is a fantastic chart. Facebook. Now, if you are an OMNIAC, you will know that I've seen Facebook way, way back here in November and called the bottom. We said Meta has found its legs. Meta will be the foundation of the metaverse, and it is going to just take over the world and explode. And it seriously has done that since. But another one, look how far back this average has been working on Meta. It grabbed on right here and has been working really, really well. And oddly enough, what average is it? The 32 bar, same thing that's working on Amazon. Look at how well this 32 bar moving average is working. Not only is it working well, look at how it's mimicking this trend line. This shows you that Wall Street is involved in this. This trend line and this average, they just ride one another. And every time the market gets near it, somehow it gets purchased and goes straight up. Well, that tells you Wall Street is all over this, and they're using this as their algorithm, and that is the 32 bar. So your tip for Facebook, if you want to time it correctly, is use your 32 bar moving average, because as you can see, it works like magic on Facebook, like magic. So my job today is to just give you a few tips, tricks, and techniques that'll help you trade moving forward, to show you that the charts did call bottom. They are right, so you should believe in these charts right now. They were right then, they will be right now, because the market is always right. There are two rules I believe in. Rule number one, the market is always right. Rule number two, if the market seems incorrect or wrong to you, please refer back to rule number one. the market's always right. It's you seeing it incorrectly. If this is always right, it's a chart. The market is a chart. The chart's a market. If you can read the chart right, you call the market right. That's just the way this works. So if you find what Wall Street's using, it makes life a lot easier, right? The 32-bar moving average or algorithm on Meta, Facebook, will help. So it did find its legs. The analysis is working fantastically well. We had earnings yesterday, so you had this major run up and turn around and come back down. So be it. Nothing goes straight up. But as you can see, Meta, which is a huge component to the stock market, is bouncing off that 32-bar moving average, as is Amazon and some other major stocks out there. So Wall Street's using it on several stocks, not just these two. What else did we look at in our last presentation? We talked about if the bottom is in, that means the lows in Bitcoin should be in. So we pulled the Bitcoin chart to see if that was going to be true. And let's see, when we did the video, we were here. So when I did that video, we were here, and it looks like the bottom did come in Bitcoin as well as it did for the stock market. Now, what's great about this Bitcoin chart is it's telegraphing, once again, what Wall Street is using. Now, if you don't think Wall Street trades Bitcoin, there's a Bitcoin futures market in Chicago. The traders around the world are allowed to use it legally, right? It's an absolute market set up in Chicago, and the big guys trade it. So they have algorithms. I spot their algorithms. You call them average, call it whatever you want. If you want to time Bitcoin, you use the 80-bar algorithm. Look at how well this has been working. All the way back here. We can go back further. Look. It comes in right here, right? It's just about starting to come into play, not quite. Boom, comes into play right here. And look at how well from that day forward, November of last year, it just becomes a magnet for Bitcoin. You get above it, bam, it stops right at it, explodes, stops at it, through for only 2 days. Then it starts to have a little time under, but look what happens as soon as it gets above, and we're about to test it again. Nothing's 100%, nothing's perfect, but this is a pretty good one, kids. So use the 80-bar moving average, or algorithm, if you will, to time your Bitcoin. It'll let you know if funds are getting in or getting out on the futures market in Chicago. So livewithoscar.com is where you'll always find me, kids. Again, I have nothing to sell you, but I'd like for you to come hang out with me in my live trading room and spend your life with me like I spend mine, looking at charts and watching markets and going through this crazy environment that we live in. And it's a free sign up. No credit cards are required. So if you get around to it, come to my site. What else did we look at? I think we looked at, I've got a list. We looked at Ethereum. And same sort of thing happened in Ethereum. Let's pull this down a little bit. And oddly enough, Ethereum is using the same moving average, the 80 bar. It's behaving the same way. Almost always holds. If it gets through, down to the green line. Gets through, down to the green line. Right back up. Right? Gets through, down to the green line. Right back up. Let's see what it does. Maybe this is our next buy point if it doesn't hold here, where day traders will let the market tell us. So 80-bar moving average on Bitcoin and Ethereum will help you dramatically. And then there's a really fantastic chart that we looked at that basically sums up the bottom is in and is really easy to understand. And I'm going to go over it with you right now because I think once you see this, you'll understand that if you're thinking the bottom's not in yet, this should change your mind that maybe it's time to think the bottom probably is in and we could go higher. You are looking at the NASDAQ weekly bar chart. Now, I have debuted this chart in almost every video for the last year and a half because it's a really strong chart to show us future pricing. So let's go and take a look at the past before we come and take a look at the present up here. Your weekly bar, meaning every one of these days, if you will, is not a day. Every one of these is a week. So Monday through Friday, Monday through Friday, Monday through Friday, weekly bar. Something interesting about the 200-bar moving average and the weekly bar chart in the NASDAQ I want to show you. So this blue line is your 200-bar moving average. Now, let's go look at history. As we go back, I want you to note we never break the 200 ball moving average. It just does not get broken. It doesn't happen. We do not break it. That's that. Oh, wait a minute. It breaks. When? 2008. That's the only time you could get through this in this century practically. 2008, we had a crash. Understandably, the NASDAQ weekly gets under the 200 ball moving average. You know what comes back out? 2009. And never again to be seen. Now, follow me on this. What happens after we hit the 200 ball moving average? A rally ensues. Hit the average, a rally ensues. Hit the average, a rally ensues. Hit the average, should I continue to repeat myself? Hit the average, a major rally ensues. Now let's move forward. We come back down again. We hit the average almost. Didn't even get there. And look at the size of the rally that ensues next. 200 ball moving average on the NASDAQ weekly. Look at the size of that rally. Then it continues. It just continues forever. And what happens next? We come all the way crashing back down and almost hit the 200 ball moving average. What does that do for us? Major, major rally ensues. All right, let's continue. What happens next? 2019, we come all the way back down from 8,500 NASDAQ all the way back down to 6,000. Almost hit the 200 ball moving average. A major rally ensues. All right, now, I think you understand the pattern here, right? If you don't get the pattern by now, you don't have eyes or ears. This is simple, right? So let's move forward. Here we are. The market comes crashing down for COVID. Bam, bam, bam. What does it do? Even during the event of COVID and the shutdown, it stops cold at the 200 and bounces. Major rally ensues. Then we came down to February. When I had 50 other reasons to call market bottom, the NASDAQ provides me with a hit on the 200 ball moving average. And I went, that's it. The bottom is in. It has to be. I've done work on 50 markets. It's telling me the bottom's in. And then I pull this NASDAQ and that confirms the bottom is in, right? Well, that was the beginning of this year. Look at what has happened since. We bounced off the average and just started to explode, goes into a bull flag, simple technical analysis, breaks out of the bull flag, and we have been in an extended rally ever since. Traders, that is how this works. It is simple. Anyone can do this. If you've got a good pair of eyes and a clean chart, you can see what's coming forward. So these are many of the charts that we looked at. We also looked at some daily charts of the E-mini S&P. I just want to finish the charts that we did in that first presentation, and then if you guys have some questions, I'll be more than happy to take them. We also looked at the E-mini S&P. Now let's get a little closer. What's happening right now? So, all right, so we did pull the bottom, all that stuff happened, but we need to know what's going to happen next week. So let's take a look at what's happening now. We are absolutely in a bull market. This is the E-mini S&P daily chart. How do we know we're in a bull market? Well, before we started doing this, we were coming down for 2 years, or about a year, coming down. So we were making a high, a low, a lower high, a lower low, a lower high, a lower low, bear market. We stopped. February, it stopped doing that. And by March, the bottom was in, and we went low and rallied up to a high. Then a higher low, right? It's higher than this one, up to a higher high, higher than that one. We drop to a higher low. All right, we are in a bull market rally now, right? We go up to a higher high. We drop to a higher low. We go up to a higher high. Even though it doesn't look it, this high is higher than that high. So it makes a higher high, makes a higher low. That is a bull market, kids. Makes a higher high, makes a higher low, makes a higher high. It is working. It is a bull market. So what does this chart tell us moving forward? The one thing that we do know is every time we hit the top of this channel, the market takes a breather. Right here, it takes a breather. Right here, it takes a breather. All right, so if that's what happened in the past, and markets, charts are creatures of habits, technical analysts are creatures of habits, look what happened when it hit up here. It took a breather, and look what just happened today. You could call that a hit. I mean, it was close enough, and it took a breather. That is usual. That is normal. That's what we expect every time we get up here. It is not the beginning of the end. If you've got people out there screaming, I told you so, told you that whole rally you're looking at was just a bare leg. It's not. It's just a down day that we're having, right? If it turns into a bear market, we'll find out on our own, but it's not one right now. So this average on here doesn't mean anything. Let's remove it so that we're not confused by it. So for top day, we are expecting a little bit of downward movement now. Hopefully it won't make a lower low. Maybe the low's in already, but we'll let this tell us. Here's what I want you to realize though. When you hit up here, expect a breather. It happens every time. That's your E-mini S&P. Okay, what else did we look at? I think the Russ was involved in our last little gathering. So we'll bring the Russ back up. Now the Russell has a 100 bar moving average that started this whole parade, so we'll drop it on there for you so you can see what it looks like. The Russ literally started the whole rally. It started here, it bounced off that 100, the recent rally in the last couple of weeks. It bounced off the 100 bar moving average perfectly. It gets above, bounces, holds, and just explodes, gets out of this huge pennant and just takes off. It just fell out of what I call a channel that was building here. Let's make it continuous. See this channel right here? It just fell out of that channel, but we are expecting a breather because we just seen the S&P hit the top of its trend channel. So a breather for the next few days makes perfect sense in the S&P, NASDAQ, and Russ, according to what I'm seeing. Let's see, we looked at one more chart. Let me show you this one. Now this is just insanity. This has been and is the leader of markets. It has been since Charles Dow coined the Dow, the stock market, the Dow Jones. He also came up with a theory. The Dow theory is that the transportation average in many cases leads. The man has been right since they named the market after him. It does lead, not always, but it does lead. Here's your transportation average, and look at how everything else I've shown you is moving up somewhat. This is just exploding higher. So transportation average is a leader, and there's a reason why the transportation average would be an indicating leader, so keep this in mind. If you've got a product, you make a product in any way, shape, or form, and you've got a factory, you've got to transport raw materials to your factory, you've got to create the product, you got to then transport that product to a distribution center and or to a retail center where others have to come pick it up. There's traveling, there's transportation involved in every aspect of building something, everything. So if you need that much transportation before you even built the product, it shows up in the transportation average first. Conversely, if you don't need to make products because orders are slowing down and you're not filling your warehouse with as much, you're not pulling in as many raw materials, you're not shipping as many finished products, the transportation slows down first and then the rest of the market catches on. Well, that's how this works. It's a simplistic explanation of the Dow theory, and I didn't bother bringing in the waves of the ocean, but that's simple enough. And this is what's been happening for this whole year. The transportation average has literally been leading us up and having little down spurts and then leading us back up. That has been our leader. And there was one more chart I wanted to show you with a fantastic tip that I think you will appreciate. And from there, I will open it up to questions and answers. Check this one out. Look at NVIDIA, and let me snap the average on there. Back to the 20. They're only using a couple of averages these days, the 20, the 22, and the 32. That's about it. So let's get rid of this average and leave the 20 out there and take a look at this. In fact, did I click the right one? I did. Okay. So check this one out. Previous webinar, when we called bottom, we were right here, Traders Corner webinar. And we talked about bottom is in. NVIDIA is a fantastic chart. I know I do videos all the time about NVIDIA. And we were down here. And that's about when, well, actually further back, but that's about when I started paying attention to the 20 bar moving average. And look what it's done since. I mean, it's ridiculous. There's a great tip for you, kids. If you're an NVIDIA trader, look at this thing. It's like the simplest Wall Street secret unveiled for us. So you get back down to that average and that green trend line, and it's probably another buy for you right there. So these are the charts that we looked at. You see this massive breakaway gap showing you that it is real. Unfilled gap, probably won't be filled for a long time. This right here likely is building a bull flag. I think, let me just see if I can illustrate a quick one for you. I think you're building a small bull flag right here. So in other words, I think this is probably just a bull flag that had a little bit of a blow through. Come back down to the bottom of the flag, which will catch the average. It'll catch the trend line. It'll catch the bottom of the flag. It'll probably be a very smart spot to get yourself long NVIDIA. So today's presentation is my gift to you all. I hope this helps. If you would like to join me, it's really easy to find me. Just come to livewithoscar.com. You register. If you don't have a membership, no credit cards are required. Very simple. Check your spam. I promise you, your email will go to spam. You got to wait for an email. It'll go to spam. Check your spam. Come back, and you'll be logged into the site. And if you log into the site, then you can find me simply by clicking Oscar's chat room. And here is where I'll be in a live trading room where I actually am right now. I can wave to you guys from the camera behind me. I'm using the front camera for this presentation. Otherwise, there'd be another camera on me. Hello, Mikey. So I spend my life here. It's a free trading room. And if you guys want to get through these rough and tumble markets with me, you just come on down to livewithoscar.com, join for free, and let's see what we can do together. With that, thank you, Ken. That's what I wanted to show everybody. If you've got some questions, I'll be more than happy to answer them.
Oscar, can I ask a question?
Absolutely.
How about an analysis on Tesla?
On Tesla, let's go take a look. So first of all, you see you fell out of that channel, right? Looks ugly, and that looks like quick analysis, like a bear flag. Now, I don't know that this is the actual average that I would be using on Tesla because it's not. It just looks really sloppy and not for me. Wall Street loves the 50 and the 100, right? So let's look at those just because Wall Street seems to like them. Let's see what they're doing on it. All right, so it's got nothing to do with the 100. Let's turn that into a 50 and see if they're playing with that at all. And then I'll show you what I think of the chart. All right, so they're not playing with anything right now that I care about or that Wall Street uses as a mainstay. So we don't need to invent stuff. I don't want to use an average that Wall Street's not using, right? We don't want to invent the things. So here's what I don't like. Tesla had a target of 1380, which would have made it a double top, right? Got a top there, got a top here. We were waiting for a test of that double top. I had it labeled. It never showed up. What I don't like is that we fell out of this channel where all the other stocks I showed you are inside of their channels, including the indices I've shown you are inside their channels. But Tesla is outside of its channel, and, you know, I would call this a weird, unorthodox bear flag. If I had to come up with something to call this, I'd slap this around it and call that a flag, right? Which would make it a bear flag. So you got to think lower, Tesla. And if that was a bear flag, that projects easily down to 240, if not lower, somewhere down here. So I don't like Tesla right here. As a day trader, I would be selling it, not buying it.
Thank you, sir.
Of course, of course. Is there anything else I can help you with? So I don't know how many of you are listening, and I don't know where you're from, but if you are near Rockland County, anywhere in the tri-state area, I will be there. I'm flying out of here tomorrow, late tonight, tomorrow morning, and I will be in Rockland County where I'm going to hold an OMNI camp, which I didn't bother to mention to you guys, but I hold a 4-day seminar where I teach people my techniques, only a few people at a time. But after the OMNI camp, I'm throwing a soiree. We're going to have a little OMNI camp gathering, an OMNI camp party, an OMNIAC party, if you will. And I've got OMNIACs from the tri-state area coming to hang out with me. If you'd like to join our party, it is Thursday, August 4th. Am I right about that, kids? Let me check my calendar. It is Thursday, August 4th. That works. At around 1 o'clock, if you're interested, contact me in some way, call me. You can get to me if you really want to find me. Go to the site. I'll give you the address. We'd love to have you. It's August 3rd, not the 4th. Are you sure about that?
Yeah.
Thank you. It's August 3rd, not the 4th. Thursday, August 3rd. You are correct. So if you want to join me for that, it's just a party, but we'll get to shake hands. You know me, I'm always looking at charts. We'll be looking at some cool stuff while I'm there. And thank you, Denny. It is August 3rd. And by the way, my chat room's reminding me they're watching me make a mistake. I'm going, no, Oscar, it's August 3rd. Thank you, guys. So Metastock will likely come up from Utah and join me in Rockland. So we'll have some presenters from Metastock there as well. An open invitation to any of you if you'd like to come join me in Rockland this week coming. So anything else you guys want to look at? Is there a stock you have in mind? Because what I showed you is what I was looking at for the last 24 hours, but I don't always look at everything. I'm sure some of you may have a couple of stocks that you're looking at or a couple of commodities. You know what we haven't looked at, kids? Let's go look at crude. So crude right here is testing major resistance. So what happens here? Simple analysis. We won't even bother considering doing an OMNI or anything else. Simple analysis. What do? For me, you get above this and hold for 3 days. 1, 2, 3, you can become a buyer. If you start to fail here, you see what comes next, right? You fail here, you see what comes next. You need 3 closes above crude, above that resistance line to call it broken, to call that broken out. So if you can break out for 3 days, settlement has to be above, not just a dash above. The settlement, which is the dash to the right, if that is above this red line for 3 closes in a row, I think it'll be time for us to get long crude. What should happen, however, is that crude is a creature of habit, right? It drops at the line, it drops at the line, it drops at the line, usually. All right, well, what's the dollar doing? If the dollar is going up, it's going to put pressure on crude. Dollar stopped going up for 1 day, which was the Fed meeting, but look at this bar today. Look at that outside reversal upward bar in, well, the Fed meeting's over now, in the dollar. So if the dollar is rallying like this, I promise you, it's going to put pressure on crude. It's not going to stay above. Let's try that again. I don't think crude stays above unless, you know, of course, something happens in the Middle East to make things crazier than it is now. Technically, if the dollar is rallying and crude's hitting resistance, the likelihood is crude is hitting resistance. So that's my presentation to you kids. Make sure you come join me at livewithoscar.com. I will put that in front of you again just so that you can see it. Make sure you join me. Simple. Register or log in if you haven't logged in. Check your email if you're registering and come join me in my live chat room.